We are now going to do something a little different, something a little special. As you can see, they're going to be affecting a transformation of the stage, which will suggest that the next special person that I'm going to be inviting up here will have some friends joining him shortly. And I'm going to drag this out as long as I can until I can get this guy on stage. Here we go. So, ladies and gentlemen, we've had a tremendous morning here so far, and we are going to be extending it with a special conversation among some very special people. The leader of this conversation, and to close out our event today, is going to be none other than the chief executive of the Hong Kong Monetary Authority. He's going to be coming to the stage one more time. I must say, with FinTech Week last week and the Global Financial Leaders Investment Summit this week, he has been a very, very busy man. And we have a place for him to sit, so please welcome one more time Mr. Eddie Yu from the HKMA. Cheers.
Thank you, everyone. Thank you, everyone, for the patience to sit through the whole morning. And we've talked a lot this morning about the complexities of the world, about serious subjects like technology, ESG, etc., etc. But for this lunch fireside chat, I'm sorry that we're running a bit out of time, so we're serving you while doing this fireside chat. And for this fireside chat, we are actually thinking that, hey, we've talked enough about the world. And this chat will be a bit more Hong Kong-centric. In fact, it will be very Hong Kong MA-centric, because after all, this is our birthday party, and you're our guest, and it's quite legitimate to talk a bit about the HKMA. And what I'm going to do is to take you down the memory lane to the day when we were established. It was the 1st of April, 1993, 30 years ago. And at that time, we had a very, so fast. Well, that is actually the day of our opening of the HKMA, the first day that we came into business. At that time, we were just a small office. You can see that there are only 12 people there. I was in the office of the exchange fund with just 60 people, managing about 38 billion US dollars. And after 30 years, we've now become more than 1,000 people, managing more than 420 billion US dollars. But what's special about this photo is that so far in the 30 years, we've got only 3 generations of the head of the HKMA. And all 3 heads are actually in that picture. So I'm going to let you have a guessing game about who's who in that picture. Now, let me start with the easy one. And the first one, he looks exactly the same, except that the black hair has turned into white hair. And the second one is this. Well, he's actually very similar, and he looks forever young, and he looks very much like the same. But the difficulty, the challenge for you is to find me here. Mind you, I was 30 years younger, and I had a lot more hair than what I have now. And this is me, all right? and And of course, a traditional Chinese opening ceremony cannot be complete without our best friend, the roaster pig. And we share everything that day. So it was the first day of our opening in a very modest office in the Admiralty Center 30 years ago. And I'm very glad that our 2 previous chief executives of the HKMA is also with us today. And I would like to invite both Joseph and Norman up the stage so that we can have a short and sweet fireside chat. Mind you, this is actually the first time ever that the 3 of us are on the same stage having a fireside chat. We have never even taken a photo publicly for the 3 generations of the HKMA. Please take a seat. Now, let me start with you, Joseph. Literally and realistically, you were actually the one creating the HKMA. It was 30 years ago. Can you take us through the memory lane to tell us what the background is? Why do you think there's a need? And at one point, I thought you told me that because it was in 93, the preparation was more like in 91 to 92, and it was to run up to the handover of sovereignty in 97. It was a sensitive time. You once told me that the creation of the HKMA has to involve both the British and the Chinese central banks. And is there any pivotal moment, deciding moment through that process that you can share with us, Joseph?
I mean, if you want to look back into history, I suppose a defining moment can be a decade long, okay? So if you look at the 10 years before the setting up of the monetary authority, you remember what happened? We had a monetary crisis in 1983, leading to the fixing of the exchange rate. We had at the same time a banking crisis which lasted for 4 years, involving the rescue of 7 banks in total, and I was involved in doing all that. And then in 1987, we had the stock market crisis. So we had monetary crisis, banking crisis, stock market crisis. Now, as a junior officer, having some responsibility on money and finance in Hong Kong, I said to myself, hey, this is not on. And the political handover, it's getting near on the time horizon. So the defining moment, therefore, was the time when I decided that apart from firefighting, you've got to do a bit of work on fire prevention as well. And that means creating the infrastructure, 3 I's actually, creating the infrastructure, creating the instruments, and creating the institutions necessary to command confidence amongst yourself that Hong Kong works, okay? So that was done actually around 1988. And the first event, actually, I don't know whether our new queen has already left, right? We had to wrestle, actually, from the Hong Kong Bank, which was the clearing bank of the banking system, and therefore in a position to create money in the hands of a commercial bank. We had to rescue the power to create money from a commercial bank, the clearing bank, back into some form of a government institution. So we managed to do that in 1988, and that was the first of the fire prevention measure that we introduced. And then after that, of course, we were the first, among the first jurisdictions to introduce capital adequacy requirement in the banking system, et cetera, et cetera, et cetera. And until 93, the time has matured for us to set up the Hong Kong Monetary Authority. You were right, we had to talk. We were in the colonial government, and because of the royal instructions and the letters patent, anything, any change in Hong Kong concerning the monetary and financial system, you have to go to Whitehall. And if we were to change something before 1997 that affects Hong Kong, after 1997, you have to go to Beijing. So I had to convince Whitehall, Beijing, and of course Hong Kong, the colonial government here in Hong Kong. That process was a long one and a painful one. But after, acquiring that power of control over money in 1988, we had established a bit of confidence, a bit of trust amongst the 3 sort of institutions. I had to go over to the Bank of England and in front of 7 or 8 people, including Eddie George, now sadly has passed away, and somebody called Tony Colby. I don't know whether anybody knows him. He's a very, very knowledgeable technical person, and a number of others, including Ian Pendelate, I think. So I had to sit there in front of 7 or 8 of them and tell them that, hey, I want to do this, please give me support. So, that sort of moments, I suppose, would define the HKMA, but it lasted for 10 years, actually. It's a whole decade of hard work, switching from firefighting to fire prevention.
Right. And after the establishment of the HKMA, you were still confronted with many different crises. 4 years after, we've got the Asian financial crisis, and then there's this very famous market intervention into the stock market. And then, of course, we've got the global financial crisis, but in between, we've got SARS, we've got also the pandemic, well, we've got SARS, and your pandemic is my era and not yours. We've got SARS. And every time when we go through all these crises, even when there was the handover of the sovereignty, there were always doomsayers saying that, hey, Hong Kong is dead, Hong Kong is doomed. And right now, we're actually also seeing some of these doomsayers coming back. And what do you think Hong Kong should do in response to that? And how in your experience for all those crises, how did we pull through? How did we stay strong?
Yeah, I mentioned fire prevention work, and that is absolutely necessary. I mean, you have to get yourself prepared for eventualities of events that it's probably beyond your imagination. So that period of hard-working fire prevention work actually helped us in 1997 when the Asian financial crisis broke. It broke in Thailand and not Hong Kong. On the 2nd of July 1997, one day after the handover, it broke. But it was not because of Hong Kong, but because of, Thailand. Although later on in 1998, they focused on the Hong Kong dollar and we had to fight a battle. Now, I mean, we have to be prepared. Now, risk management, contingency planning, and all that is very much part of the DNA of the HKMA, and I hope you have inherited that DNA.
I've got it, don't worry.
And so, at this point of time, when we are facing very complex geopolitical developments, and the doomsayers are all coming back, etc., I hope you'll be in a position to handle that. Because I'm actually quite confident that we in the HKMA, having worked together for so long, have got the Hong Kong monetary and financial systems as robust as it really can be. I'm actually very confident about that. But of course, we are going through a scenario change that we have not seen in a century, right? I mean, President Xi mentioned this. The geopolitics involved is very complex. What is likely to happen? I don't know. Let's hope that the Vice Premier later this week going to Washington to meet up with Janet Yellen could produce something constructive. Because I don't really see the two largest economies in the world decoupling. And financial globalization has actually moved to a stage where you can't really step back. And the US being the largest debtor nation in the world cannot really be imposing financial sanctions in such a big way on the largest creditor nation in the world. I mean, and so you have to be prepared. But the world is likely to change because the financial world, the global international monetary system could well, from now on, become rather more bifurcated. And Hong Kong is the right place to straddle the two sides. Right. So be prepared.
And I think the fact that we've got all the heavyweights in global finance gathering here in Hong Kong is a good validation of everybody's confidence in Hong Kong and probably in the Hong Kong MA as well. So I thought the credibility that you and Norman have built up over the years is really helping a lot in building that trust and confidence. Now, let me come to you, Norman. You took over in 2009, right after the global financial crisis, and you were involved a lot in the post-global financial crisis reforms, not just in Hong Kong, but globally. You were chairing the FSB Regulation Committee at the time. So how do you see global financial reforms coming to this stage? Is there more that you think that needs to be done, or is it really going on as you expected?
Well, thank you very much, Eddie, for having me at this fantastic conference. So many good friends, old friends that I've not met for a long time. I cannot think of a better way to celebrate our birthday, 30th birthday, through this fantastic conference. Really appreciate it. Now, to answer your question, let me first pay tribute to very distinguished colleagues in the Financial Stability Board. I had the honor of serving on the board as a member for 10 years during my term as Chief Executive of HMA, under the capable leadership of Mario Draghi and Mark Carney, who has left as chairman. I would say that compared to the time conditions of the global banking system back in 2007 and 8, and after a lot of hard work, also thanks to the Basel Committee on Supervision, the Financial Stability Board has done a lot of good work, accomplished a great deal. Although some of you may not like it, Basel III, I don't think this 80,000 pages of return is mandatory, at least not in Hong Kong, I hope, Eddie. But the banking system has become much more resilient. Of course, there will be work that is still in progress. The panelists talk about the potential risk of pushing all this credit creation to the non-bank financial sector. I mean, this is a situation which we, even back a few years ago, was aware of, acutely aware of. But that is a difficult area in which more work needs to be done. We have done a great deal of work on the insurance sector. Now, having said that, these efforts had not prevented the failure of one of the big GSIP, Credit Suisse, that some panelists talk about this morning. Is it about capital, or is it about liquidity, a concentration of customer base, or business model, as one panelist pointed out? I think there are lots of lessons to be learned. I think this is an area which the FSB should focus on. There's another area about why this hard-earned resolution regimes that we fought so hard to build was not triggered. Then there's a takeover, a hasty takeover, where there's a deal wanted by UBS, another matter, but it was hasty as a write-down of the additional Tier 1 capital, while preserving some value of the shareholders of Credit Suisse in other contentious area that must be studied. But in terms of the work by the FSB or the International Committee, so I would just say point out two areas which I don't think have received sufficient attention. The first one is relating to the impact on the financial system. As a result of a very prolonged period of exceptionally low interest rate with abundant liquidity. When QE was first launched, and then it was extended, and people called it QE1, remember, and then QE2. Before you know it, it's QE3, and then QE forever. Although the Fed tried to indicate the threshold at which they would consider reversing or normalization, that trigger was dropped quickly. Remember the 6.5% unemployment rate as a threshold, ushered by Chairman Bernanke? But people got used to it and somehow mistakenly felt that that's the normal. Because as long as inflation is kept under control, this can carry on. I think very few of us had expected the circumstances in which the inflation pressure picked up so sharply, because it's partly due to geopolitical tension, war in Ukraine, energy prices. But on the other hand, if we in the financial industry accept that this exceptionally low interest rate or zero interest rate and quantitative easing is not going to be sustainable, it's not going to stay there forever, then one should expect normalizations to take place. Except we don't know the timing, we don't know the circumstances in which it will happen. But it has happened. And the impact it on the balance sheet, we talk about Silicon Valley Bank, maybe many other banks' balance sheets have been badly damaged because of this investment in the bond securities. And also, I would say some pension funds, pension plans, they're under stress, like those in Japan, because rates have remained so low or even negative for such a long time. When interest rates should pick up, hasn't really happened yet, that will have an impact. So I think more work needs to be done, I think, by the FSB on this interface or interaction between monetary policy and the financial system, financial stability. The second point which I want to talk about is something I hope it won't upset too many people, is I don't think sufficient discussion has taken place on the impact of prolonged zero interest rates on the society. In other words, put another way, is the effect of causing a widening of the gap between the haves and have-nots. Quantitative easing, accommodating monetary policy are designed to support economic activities. Through that, employment, no doubt about it. It was deployed during exceptional periods. We can understand that. But once you get used to it, you use it for too long, then it will have the effect, intended effect of supporting or inflating asset prices. What does that mean? That means the rich people, the haves, who owns the bulk of the assets, would get benefits. They get richer. At the same time, the ordinary people, ordinary folks, would feel poorer because the assets become more and more expensive in Hong Kong. Young couple with decent education, maybe working for Blackstone is an exception, find it hard to have the down payment to buy a small flat. And the parents have to intervene and chip in. That's a common phenomenon, not just in Hong Kong overall. So some have argued, therefore, I find some validity in it, that this monetary policy is one of the factors leading of the increased support for populism, the fragmentations of the middle class. And that's an area I think worth further consideration and study.
Thank you. Let me turn to another area that you've taken Hong Kong MA really a long way through that spectrum, which is market development. You've led the development initiative on the Connect schemes, on the R&B market, FinTech, and then ESG initiative. And looking at it from now, you're more from the private sector's point of view. Are there areas that you think development may not be sufficient, that we should do a bit more? Are there areas that you think it should be refined or revised? So what's your take on that?
Okay, thanks. I would just echo what Vice Premier He and others have said. I cannot think of any other place than Hong Kong, which is better place in intermediating trade and financial flows into and out of China. You can use different terminology. It's a gateway, it's a conduit, it's a window. But to do that, one must build bridges, the conduit. And we have many Connect schemes, you have heard. We have the Stock Connect, first of all, 2014. And then we have Bond Connect. But this Connect scheme are very useful. It's incremental. It started from a limited scale, controlled manner, and then it's kind of matured. That's all very good. But I think now the world has changed. It's complexity in this paradigm shift that I think, in my view, we should speed up and expand the scope of these bridges. The Connect schemes, take for example, the Greater Bay Area we just talked about. The Wealth Connect, the Wealth Management Connect is a great thing, but I think the scope is a bit too narrow. The amount, the maximum ceiling is also too low to make it user-friendly or attractive. So one should consider expanded it. Another way, I think I have advocated, I think so have Joseph, is that maybe we should take a bolder step in building a special bridge between Hong Kong and the Greater Bay Area. Because the Greater Bay Area, although it's big, it's just part of China. Therefore, we can afford to have some pilot scheme to see how it goes. One simple thing that I think we should consider is to allow a freer move of capital between Hong Kong and the rest of the Greater Bay Area. If the money is raised through, let's say, designated approved channels, the deployment of the latest blockchain technology, in my view, is able to ensure that the money that flows around Hong Kong and the Greater Bay Area is quite big already, would not go beyond that on the other parts of China. And therefore, this can be used as a pilot to see how this would impact on the capital raising and economic activities in the Greater Bay Area.
Thank you, Norman. Let me just throw one last question to both Joseph and Norman. In your 30 years in the HKMA, you've got loads of memories about the HKMA, the work here, the colleagues, the teams, our friends and our partners. Is there one or two really fond moments of memory that, well, it doesn't have to be fond, it could be good or bad, really lasting memories that you want to share with us through your 30 years here?
I can tell you many, many of these. For example, after the intervention in 1998, Alan Greenspan sort of came out and said, hey, you're doing this sort of thing, it's not really good for your credibility, you know, being a little critical. But after a couple of years, he came to Hong Kong for a BIS meeting, and he pulled me aside and said, Joseph, perhaps you were right. Thank goodness. I mean, that was a vindication, all right? Another event, 2005, renminbi exchange rate reform. Yeah. That was in July. You know what we did in May? 2 months before? We strengthened our system ahead of time, preempting any shock wave. That's the sort of thing. And 2008, you were there, yeah. All right? The triple bogey weekend of what? Merrill, Lehman, and AIG. We call it the triple bogey weekend. I was able to go to my secret room, open the safe, and pull out contingency plans to provide, if need, capital for the banking system, liquidity for the banks, and guarantee all deposits, right? So in the end, we use all that. Right. So to be able actually to do that is quite pleasing. But I can tell you something more. We moved to the 88th floor of 2IFC, and on one day I thought, wow, because there were fireworks going on the 1st of July or New Year, I thought watching fireworks on the 88th floor would be fun, wouldn't it? But try watching fireworks on top of the fireworks, and it's all smoke coming out.
You can only see smoke.
that's one thing. Another thing is, you know, we have typhoons. These typhoons can be quite strong. So on one occasion when signal number 10 was on, I went back to the office, 88th floor, put myself near the window and feel the vibration. That's another, wow. That's another thing that I can remember. You want to have funny moments, right? The last funny moment I would share with you is running up 88th floors for charity, and I did it within half an hour.
Yeah, I did not participate. It was hard. Try to think about it, running up 88 floors in half an hour. It was really tough. But the three moments that you talk about, the market intervention, I still remember reading Alan Greenspan's letter. I was the assistant to Joseph at the time, and it was a little sort of intimidating, I would say. The last bit about global financial crisis, I was also there. We really pull out the folders. You may not believe it, but we really got everything prepared. And we pull out the folders and just implement them. And the same goes with now. Contingency planning, be prepared is always in our blood. And we still have different folders, some in electronic forms now. We're still keeping it so that we are prepared. And Norman, your turn.
Well, I won't be too greedy. I just mentioned three moments, which when I say memorable means you can't forget. Maybe something horrible. The first one is to follow up on what Joseph talked about, the accounting arrangements in 1988. 1996, December the 9th, that was the day that would go live on the real-time gross settlement system in Hong Kong. In terms of IT development, it's a big deal. It's one of the first. I mean, I think it's really the first in Asia. The Fed was the leader, the pioneer, and then we were trying to learn from the Fed. So we have the RTGS. But the significant aspect, though, which we did not advertise at the time, Noah Quinn is gone anyway, I can talk about that, is actually formally to have the banks clearing through HKMA's book. RTGS is another sort of tech dimension that you can settle on gross basis, on real-time basis. Everybody does that now. But that was the first time we actually take over the book. So all the banks in Hong Kong clear through HKMA. That was, but the thing is, before that, we tried so many, but there's still a few bugs left. We tried overnight to fix them. Except one, there's one bug that, Ed, you remember that? Yeah. We're trying so hard, and this didn't go away. It's about inquiry function, I'm bored of that. But then my advisors told me, if this one doesn't work, you don't have a fallback. There's no plan B. And I was asked, how much was the daily turnover? They said, not a lot. It's 300 billion in Hong Kong at the time. It's much bigger now. So that was a very challenging time. I didn't know why I was able to sleep that night. So December the 9th. And
we did it all in-house.
Yeah, we did it. We constructed that.
Yeah, but we have to give credit to HSBC helping us to revamp the software. But that was a great challenge. We passed through that. The other one was August 14, 1998, when we had to undertake this market intervention. It was unorthodox. It was have to be kept highly confidential. We could not consult widely, so just a few of us, the core. It's tremendous pressure. That was a day that I won't forget. The third one I'll mention quickly was 3 weeks after I took over from Joseph. That's the third week in October 2009. Because quantitative easing, talk about it, it looks like the Fed is going to keep that policy for much longer rather than a kind of emergency step. With Hong Kong economy going strong, right, we thought interest rate going to be low for a long time, and there's strong demand for housing, property markets. So we think this is going to have overheating. And I didn't want to repeat what we experienced in 1997, this bursting of a huge property bubble. So within a short time with, I think Eddie, Arthur and others, we gathered together and quickly decided to launch tightening measure, but we give them a very eloquent label. It's called a mouthful, counter-cyclical macro-prudential measures. Now, it's a mouthful because I thought it's not just one of the tightening measure, like ad hoc response. It's kind of based on the principle that none of us will actually know when the bubble will form and burst, and therefore, when the market getting very, very, very hot, we would tighten underwriting standard a little bit, just a little bit, not to stifle the market or too strong. But as the market become even hotter, we would tighten a little bit. Little did I know we had to do, how many? 9? 9 rounds. That was because of this unexpected period of long zero interest rates. And therefore, funds keep on flowing to Hong Kong, in the Hong Kong dollar, and market become very buoyant. And I don't think I was a popular guy in town, because I was hindering people's ability to buy properties. Every time I announce something, every round we raise the down payment requirement, people are not happy. But at the moment, I think we should thank ourselves, HKMA, for this tightening, because the property sector, although it's going a downturn, the banking system, the financial system, the household position are in a very resilient condition and thereby able to withstand the shocks. So those are the 3 moments.
Right. I think the one moment that is shared among us is the 1998 market intervention. It really stays with us. It was 25 years ago already, and I still remember the shock that I had. I was the assistant to Joseph at the time, and I just came back from graduate school from the US for a week when Joseph walked into my office to say that, hey, tomorrow we're going to the market to buy stocks. And I went, are you crazy? I shouldn't say that to my boss, but I did say that. So that experience, that moment was something that one can remember for a long time. And with that, thank you very much, Joseph and Norman, for sharing with us your journey in the HKMA. And also with that, I would also like to thank you so much for coming all the way here, joining our birthday party, and having all these stimulating discussion for the whole morning, and for staying throughout at this summit. Thank you very much, and I hope you enjoy the rest of your day here. Thank you.